the more remote you are, the more digital you are. A digital journey at some level, technology, whether it's digital or something else, really requires the total buy-in of the CEO.
Maynard is online and queued. Do we have Gene?
Gene's ready.
Okay, let's start the stream.
Welcome to our webcast. I'm really excited to be able to sit down with all of you today and have a conversation about technology adoption in these last several months around the COVID-19 transition for our marketplace. Joining me is the CEO of Tudor, Pickering, Holt & Company, Maynard Holt. Maynard's the CEO who's been in the investment banking arena for, well, Maynard, I guess I'm going to have to use the word many decades.
Yeah.
25 years with TPH alone. That's quite impressive. But thank you for being with us.
No, look, it's great to be here, and I'm excited about today's topics. I think we've got some good questions teed up.
Well, great. It's great. Let's move right ahead. There's our mug shots for everybody in case they don't want to see us in different times. One of the things that's been very interesting to me is your COB Tuesday webcast that you guys host from the TPH premises, and it's been a great overview of what's been transitioning week to week since the COVID-19 situation unfurled. And you've had the opportunity to meet with Senator Dan Sullivan, Dan Yergin, the Railroad Commission of Texas. And I guess, for our viewers, I guess a great way to start is just, what's your perspective on the macro these days? It seems like there's a bit of a recovery maybe underway.
Yeah, there really does. I think you referenced, Gene, these Tuesday interview formats we do. We, in the research business, so writing reports on companies or writing reports on where you think oil is going, it can be a very sort of antiseptic kind of thing, and people send out graphs and there's long paragraphs, and there's on the one hand this and on the one hand that, and honestly, some of those sessions, they came out of me saying, hey, I'm thinking like the customer here. What are you guys saying? What is the answer?
Exactly.
And can you please reduce it to 30 seconds? And it has been interesting to watch things improve. I think as I reflect on the last 10 weeks or so, is that probably the thing that I noticed is when the deal happened between OPEC, the Saudis and Russians, and OPEC Plus. Right. I think at the time, I wouldn't say there was a yawn, but I think people underestimated what that meant down the road, because everybody was so focused on the immediate pain. And then subsequent to that, we obviously had that day where we had the negative trades.
Right.
But where we are today is looking pretty good. The Saudis are producing 7.5 million barrels, which is kind of unprecedented for them. The U.S., we did cut back quite a lot. Some guys got burned playing in the oil markets, and so they're probably not as eager to jump back in. They were a big part of the negative. But I did this. We do a weekly town hall at the firm just to post people on what's going on. And just for fun today, I had one of the young guys pull every oil and gas price estimate you can find, not just ours, right. Every brokerage firm, all these guys. And there's the average for next year is $46.
Wow. And
$46, to me, that's like saying, we're all going to be at the Four Seasons next year. Like, that's just,
exactly.
That's like so fantastic to think about. And our folks are saying, look, by the end of the year, we think the over-under is 40. But my gosh, we're already in the low 30s. So I think there has been an improvement. It has to do with OPEC Plus. It has to do with the physical market. I think us running out of storage was a overblown and not fully accurate story. And so, of course, the broader market has improved. And so I just, there's definitely a little bit of optimism right now. And those first, 6 weeks or so from the day the Russians and the Saudis had the food fight,
Right.
I don't know, for about 6 weeks after that, that was a really awful time to live through, obviously.
Yeah, there's several memories I've had. Obviously, this, as you know, I'm relatively new to the energy sector, so this is my first significant price decline. And the day it went negative, we were sitting in my staff meeting, and a number of my employees have been in the sector for 10, 15, 20 years. And obviously, we're doing this over Teams, a Zoom kind of conference, and they I was talking about related business activities, and no one was responding because they were all looking at the price of oil heading through $6, $2. One guy goes, it's going negative, and so the staff meeting quickly became, oh my gosh, what is this? So it's been remarkable to watch the resiliency of the market. Frankly, to be honest with you, I'm excited about. It looks like I've been looking at a few stats, like the use of Waze has gone way up, so people are driving again. The demand side seems to be coming back, which is also encouraging.
Yeah. We, the interesting thing about times like this is there's so many moving pieces. Trying to sort out the net effect is so hard, right? And I heard a great quote. We just finished earnings season in energy land and for all the public companies. But one of the CEOs, it was Tom Jordan at Cimarex. He had a great quote, because all these earnings calls were so strange. People were like, well, the first quarter is irrelevant, and we don't know what to tell you about the rest of the year. Any questions? And Tom said, look, the one thing we know for sure is that we at some point are going to be looking back on all these prognosticators, and we're going to be saying, wow, were those guys wrong? There have been a lot of wild theories, but I think you mentioned some interesting people coming on the show. Mark Mills is one guy who came on. If you don't know Mark, he's sort of a energy technologist, futurist, right, big thinker. And Mark said, by the way, a Zoom call uses natural gas-ish, right? Like you do a Zoom call for an hour, you just use power, and that came from somewhere. And people forget this stuff. And the other thing they forget, I guess there's a lot of data on the SARS epidemic in China. When they did shut down air travel, domestic air travel, they experienced this huge surge of car travel. And when you think about what's going on now, it kind of sort of feels like we're about to experience something similar. I tell you, we had a gathering last night. I sent Tammy some information that you guys can look at, but we had a gathering last night of about 120 oil and gas business development people. And, we talked about the markets, we talked about the forward curve, we talked about all the estimates, we talked about the variables. But my question for the group was, has anybody in this whole crowd ever seen a better time to invest in oil and gas? And so I'm cautiously optimistic. My partner, Dan Pickering, has a great expression. He says, oil and gas in 3 years is going to be fantastic, but you have to be present to win. And that is, some people are throwing in the towel. Investors are throwing in the towel. And obviously this environment, this brings into question survivability for a lot of companies, which is obviously a very sad and painful thing. So there's a massive amount of stress right now, but it is better than it was. I had a good friend tell me, I think this week, he said, I never thought I would be like giddy about $33 oil, but I'm just giddy. So feels a lot better than it did not too long ago.
Yeah, we're all feeling a lot better about our market and where it's going. I think that one of the more interesting things about the last 10 weeks is that, it has really been disruptive like when I look at a lot of our customers, has really been disruptive. This cartoon maybe depicts
I love that.
which is, we've all been talking and we're in the business of helping our customers really think through digital transformation.
Mm-hmm.
But the pace at what we could definitely have an argument about the pace of which the energy sector has been moving.
Yeah.
And yet here comes the wrecking ball, and everything had to change overnight, right? We all had to migrate to a different work pattern, a different way of engaging, a different way of running our businesses. And I would say a lot of our customers just had a hard time adapting to the kind of format you and I are in right now, being able to work from home and being able to engage their business, get the reports they need, the information they need. I'm curious, is that something you've seen talking to your many customers?
It's interesting. So I mentioned this dinner we had last night. It's fresh on my mind. We did a virtual steak dinner and polled everybody ahead of time and then shared the results. And one of the questions was, are you more or less productive than you were, previously? And 50% said no change. 15% said, I'm actually more productive. But the rest, 35%, said I'm less productive. And, what we at TPH have experienced, we were already, the kind of culture that is as a digital traveling conference call, et cetera, kind of culture. Most of our people are reporting, 80+% of them, I think, maybe feel more productive because they've eliminated travel and eliminated a lot of things. So I was a little struck by that. It may go to what you're talking about, which is there were a lot of customers in oil and gas land who, aren't where they want to be in terms of automation and working remotely. And you would know so much better than me, but the digital platform seems to be a cousin of just working remotely. Like the more remote you are, the more digital you are.
Right.
But I think one of the questions that everybody is wondering about is, what does a downturn do like this to technology spending? You would think, of course, it reduces everything, but within the menu of technology spending, where do the dollars go? And of course, one of the big drivers of digital spending has been improving margins, and that becomes even more important in a market like this. So there's all these trends, and we're all sort of in the midst of the companies just honestly focusing on survival. We're all, I think, looking for clues on what's the right way forward, given everything that's happened.
Yeah, we're going to touch on that in just a second. I'm just curious, though, in this change for your firm and being a CEO, have you had any ahas with the last 10 weeks as far as what the future might hold for your business, given that we've just spent 10 weeks at home? And are you thinking about you see things where some of the tech firms are saying, you guys don't have to come back for the rest of the year. Is that something you embrace, or are you going to bring people back to the office as soon as feasible?
I'll confess an observation that I've had for a long time, because we have great space in downtown Houston, and then we're in Denver and Calgary and London and New York. But our big space, where most of our people are, we're about 160 total, 120 here. This is the big space. This is the big spend. And I, for a long time, have felt like, gosh, over 12 years, I think we've paid, I won't reveal the number, but it's a stunning amount that we've paid in rent. And, we could own a plane, a warehouse, a workout facility. We could have put it all in Amazon stock. I mean, surely that wasn't, so I already had those feelings, if you will. But
Yeah.
I'll tell you another counter feeling that I have that I think is really important to oil and gas. I happened to live in New York City during 9/11, and at that time I was working at Goldman. And it's interesting. The current Fed chairman in Dallas, Rob Kaplan, was then head of our Fed president. He was then head of Goldman Sachs's investment banking division. And when we got back in the offices in downtown Manhattan after 9/11, his comment was, unless it's essential, I don't want anyone to get on a plane. And I thought to myself at the time, I've never seen us do anything essential, so we will never be flying again. And people forget. So that was a world where if you got on a plane, that you thought there was a risk of a death and anthrax and all that stuff. And talk about thinking the world was never going to be the same. And then of course it recovered. So I love the digital world. I love the productivity. I love that our people are spending more time with their families. I myself have felt a little more productive because it feels like when you're remote, you're choosing your own time a little bit more wisely. It's fun when your neighbor sticks his head in and says hi, but so there's been a lot of good learnings, but my core belief is that all that stuff we used to love, it's great. In fact, it looks even better now. Like, I can't wait to fly to Midland on Southwest in the middle seat. So I think we'll modify somewhat, but probably my core belief is it's going to surprise all of us how quickly we go back to 90% of the things we used to do.
Yeah, I share that. I think the biggest change for me as a leader is I used to have a perception of work from home did mean less productivity, right? And I tended to allow employees that were doing a good job to have that opportunity to work from home and not make it available for the masses because I was worried about the impact on productivity. And I think I have seen where everyone can be more productive in a work from home situation if that's the right thing for them and their situation.
One thing I noticed, this is sort of us, is I used to take pride in the fact that once a quarter, we'd have a complete meeting. I mean, everybody in the whole firm. And we go through all the results, all the problems, all the excitement, all the, anything. So it was total open kimono. And it's been just a point of pride. Now we're doing that every week by Zoom.
Right.
And so I'm noticing the benefits of like what I used to think was great because I didn't think many of our peers were doing stuff like that. Now I'm like, holy smokes, how do you make it 12 weeks without telling people what's going on? So it does change your perspective a little bit. And I think it'll be interesting to see, like you mentioned this Close of Business Tuesday thing, will that be something that we keep going forward? Does that become a talk show-ish thing? Like, what do we do with that? And there's probably been 10 other things that have happened. You wonder which of these things we'll keep and which of these were emergency measures. And that'll be interesting to see how it sorts out.
Well, you're drawing quite the crowd because the first time I watched one of yours, I sent it to about 5 or 6 people and most of them have already been watching it. So I was the late one to the party. So but it's drawing quite a crowd. So congratulations.
Well, as you say, that the finance world is an odd world. People want to talk about, like, in any given day on a research, sales, and trading desk, so much stuff happens, so many opinions get shared, so much speculation, so much, I wonder this, I wonder that, so much. And as an industry, you never see any of that. Right. And now I knew I took it too far one day when I said, why don't we invite research analysts from other firms onto our show? I think that's when the team said, okay, he's lost it. He's really gone crazy here. But ours is a community where, it doesn't share as much, or it only shares in certain ways. And so I think breaking down some of those barriers has been helpful.
That's great. Well, back to kind of the market and the digital transformation and how this the macro environment has impacted it. One of an interesting headline from about a month ago is that only 13% of leaders in the oil and gas market believe they are adopting technology fast enough to succeed. That was a stunningly low number to me. Now, I think we would all say that the energy sector likes to see technology prove itself before it adopts it. We're not at the forefront of adoption of new technology, but at the same time, this seemed like a really low number. Have you noticed with your organizations that you work with, any changes or trends that you're hearing about technology-wise? I know financially they've been impacted quite a bit in the last 2 weeks. But are you hearing anything from them, other impacts that they're going through during these last 10, 11 weeks?
One question that comes up a ton is people ask, how come there's not more M&A, right? That's a standard question. And no matter how much M&A there is, people ask, why isn't there more? And I remember saying somebody who asked me that question, it's like, well, think about being an E&P CEO right now. You're worried in no particular order. My balance sheet, my banks, my suppliers, my board, my investors, the safety of my people, my marketing group. It's just unbelievable the amount that's on your plate. So the thought that you might pause in that and say, hey, bring me some M&A ideas. Like that's been, and I think technology is a little bit like that right now because it's like, wow, Rome is burning. Let me get back to you guys. That would be an observation about just the bandwidth of management right now. So I think when I think about this, what I've noticed is, I happened to notice, I think it was a LinkedIn, Rick Moncrief at WPX sent out a tweet, and the text, the summary message was something to the effect of, hey, be strong, we can beat this. And by the way, we got great technology and we know what's going on and we're going to be able to work remotely. And so it was a rally to the troops, but it was also a message about the confidence in remote operations and some of the things they've done. And I think that's kind of the case. You had either, everybody's probably on a digital journey at some level, and those who were further along are the companies you can notice, and this is, I think, gets to part of the commercial for the industry doing more, is the more you have advanced in your systems, in your analytics, and your ability to manage digitally, the more bandwidth you have for other problems. And so you can kind of tell, right? And so that means a smaller company, a private company that's probably made less of those investments, it's harder because you do things more by hand. It honestly means some of the most difficult decision-making can happen at the biggest companies, right? Because think of all the variables, all the assets, there's a lot to think through. So probably the company, if you want a poster child for a company that's done well in this, it's someone who was big enough and forward-thinking enough to have invested in a lot of analytics and digital capabilities, but not so large that, they were only half built or, the system was overwhelmed or whatever it is. So it's definitely been, I think, in this crisis, you notice digital coming to the forefront because it, as I say, it has everything to do with saving money. There's one last thing I'll throw in. I just thought it was interesting. We'll do these CEO lunches where a CEO comes in, has lunch with the firm and talks about his business. We'd love to have you, Gene. And this week we had Jason Pygott, who's the CEO of Laredo. And Jason came from Chesapeake. And one of the things that Jason was talking about is the changes they've made in the analytics of the company. He's a real proponent of all that stuff. And it was a reminder that technology, whether it's digital or something else, really requires the total buy-in of the CEO. Because the organization can always find a reason. Somebody somewhere is going to say it doesn't work, or how do we know it's going to work, or why would we spend that, or what's the return on that, or whatever it is. And it's only the CEO who can say, we're doing it. I'll take the risk. It's on me. And so probably my punchline is in all this, you can readily identify the CEOs who are believers versus those who are, less so.
Yeah, I was struck. I actually saw that interview, and I was struck that digital investment was very early in his talk track about what they're trying to do. And you typically don't see that out of, all respect to the CEOs of the energy sector, but that typically you don't hear digital technologies in the first minute of their discussion about the company. And I was struck by that. He's a true believer.
I thought it was like manna from heaven, because I thought, I'm doing this thing with Gene on Friday. I'm so glad that Jason just said this. I'm going to use it. But it's true. You don't usually hear that. And you certainly don't hear it when oil's $33 and everybody's worried about their balance sheet. So I was really impressed by that too.
Because you can see him with a strategy that says, we're going to take costs out of our system. We're going to be a more efficient business using digital. And then but the other side of it is you have people that are, having to take costs out because they just have to get their break even lower. And they kind of stumble upon it, right? And so you kind of have these two philosophies, where it's very thoughtful and top down driven, and the other one is more bottoms up because it's financially driven, right? And so do you see both of those going on right now, or what do you have a perspective on that?
You do. I had a great conversation with a good friend CEO about a month ago, and he just said, look, we got to get to $40 is going to be what 50 used to be. 50 has for a number of years now been, hey, north of 50, we're all kind of sort of okay, and below 50, we're kind of sort of not. His comment was, we got to get to 40. And so I'd say, look, there's widespread, everybody thinks we got to lower the cost. The digital group is, a subset of that that's decided that they're going to do it that way. But, the thing that I always find it interesting to ask a CEO, just because I'm curious, how do you get information about your business? How do you get information, period? What websites do you go to? What dashboard do you have? What metrics do you watch? Who do you call in the organization to figure out how are you doing? And to me, I think sometimes people hear digital and they think, oh gosh, this might be a big expensive program discussion. And it's not really that. It's like, to me, it's just like an analytics discussion. Hey, what do you try to watch to know how your business is doing? And EOG is kind of an interesting example to me, because I've heard some skeptics say, okay, fine, somebody has an app on their iPhone. Like, why does that, what does that do? Right? It's like, well, that's not the point. The point is, with the app, the CEO could sit at home on a Saturday afternoon and start pulling up well results. And what happens next is the reason why, it's so powerful. So it's obviously just an information thing, but somebody told me a long time ago, clients are funny. They're almost like people, so CEOs are people too. And everybody has their habits, and their habits end up affecting the whole organization, obviously.
Exactly. So yeah, it's going to be interesting to watch Jason and how his strategy unfolds. What about on the regular? Go ahead.
No, I was just going to say I've been reflecting this afternoon on if most of the world really thinks oil is $50 next year, and maybe there's upside from there, then heck, what does that mean about all these oil and gas stocks that nobody cares about? We're in a really strange world. People lost interest in oil and gas as an investment a while ago, and this doesn't make it any easier. But there's some shifting sands here that could result in oil and gas being a really great place to be.
Oh, I think if your over-under number comes true, with all the work that's being done that we can tell of people trying to, again, streamline operations and be more efficient, I think you're going to see some, nice margin expansion. Let's all keep our fingers crossed that happens. So that's great.
Yeah.
So,
yeah.
Are you seeing anything on the regulatory guideline area? Because the one thing that came up was a conversation with a customer recently that they are now being asked to document more than ever conversations they've had with stakeholders. And so, we're starting to see where, you're going to have to be more thoughtful about recording conversations or communications with stakeholders. In this case, it's in the land management arena. But are you seeing much out there? I mean, obviously there's environmental regulations that continue to come through, but what about on just in general?
I wouldn't say that we've spotted anything in general, but I do think the industry, for almost every reason, like you think every trend, like ESG, people, you not only need to be able to say you're a clean and good company that's a good citizen, you need to be able to prove it. And when it comes to margins, there's a whole nother, my point is all of this is leading to want to have more data about everything. I don't know a trend that's not going in that direction. Right. I guess the only one I noticed that's kind of an interesting, we've debated sometimes maybe we should have a mini conference for general counsels of energy companies, because as the IR department and the executives are trying to take data and get it out into the public and show the world how much better they're doing, the legal office is saying, hey, whoa, what are you guys doing? Can we not share so much because this is not required? This is not a law you guys are complying with. So there's some interesting tensions in the building that we noticed, but all of it seems to be pointing towards collect more data, have more data, no more data, no more impact. That trend seems inescapable. The only thing about it that is very interesting is, we as an industry always feel the pressure that's coming towards oil and gas, right? And it feels like the pressure is always, it's never going down. It seems to be going up. At least that's the feeling.
Right.
But that's another way of saying we don't feel the pressure that's on other industries, even renewables. And I say even renewables because, renewables are a bit of a darling, of course. But I think one of the things the Michael Moore movie shows, if you haven't seen that, it's kind of fascinating because the questions that are being raised about oil and gas, they are going to be raised about all energy sources.
Exactly.
And that's a good thing because it means we're headed towards a more intellectually honest debate. So, I'm optimistic that as, we try to be fuel agnostic, just Pickering set the tone for us a long time ago to be an intellectually honest place. And that's what we love doing. But I think oil and gas is going to get a second look from people who've written it off as, too dirty or outmoded or, whatever the case may be.
Sure. Great. I did want to ask you, what are you hearing of any technology that is coming up more and more in conversations with your clients? Obviously, this is a not an exhaustive list, but I'm just curious from a technology standpoint, anything popping up more and more from your customers they're investing in?
Well, I guess I'd say a couple of things. One thing I noticed, this is sort of a slight sidebar, is that news about Google really grabbed people, right? So that kind of stuff, that I think at the margin means if I'm an oil and gas company, I am interested in vendors who can do this kind of work for me and who are proud to do it. And so I certainly noticed that little story rippled through. I got quite a lot of emails on that yesterday. So that's a comment, but it made me think, unique providers of various services are going to get a boost from that if the big guys don't want to play. I would say, most oil and gas companies, of course, the majors in Europe spend a lot and try to go into things that are not oil and gas. The trend on the U.S. side is to just try to make oil and gas cleaner. So, electrifying the site, perhaps using solar at the site, using more downhole friendly chemicals, technologies. I'd say a big focus, technologies that help you understand just how good your frac really is. Certainly of strong interest. Absolutely, digital oil field and analytics, for sure. I think the rig up guys have built a really interesting company, which is, sort of sourcing of suppliers easily and something that's done, in a way that helps you save money and arguably helps you get better services. So that's sort of a procurement technology, you might even say. So a lot of it is definitely digital. And when you think about what is, I'm focused on improving my margins. I'm focused on getting more efficient. What's the technology that's within reach that I might spend on first to help me do that? I would say it's digital, because other things seem maybe less tested, more expensive, bigger budgets, longer implementation times. But digital has proven itself. And so, this could be a market where digital gets a lot of focus.
Yeah, I agree with you. They're back on the Google announcement. For those of you that may not know, that Google announced that they're, I believe, and correct me if I'm wrong, they're going to suspend their development of AI technologies for oil and gas. And I think that's it's obviously a significant announcement from a major tech player. But I also am not worried about AI evolving in our marketplace, because there are going to be a lot of people that are going to fill that hole very quickly. I'm also not concerned about other major tech entities, because I've actually been in conversation with the folks from AWS and Microsoft that there's a lot of strong commitment to energy from some of those folks. So I think it's an interesting development. It's something obviously to watch, but I think our market's going to survive just fine with that. And there's going to be a lot of AI to choose from. So.
Well, when you think about it, and this is something we tell our young people, right? Because everybody is like, hey, why do I want to go into energy? And it's like, well, I'll tell you why. Because energy, if we've learned a couple of things, it's that energy is directly correlated with the quality and length of someone's life. And that's a global comment. So if you want to get in on the challenge of the next 20 years, it's how to make energy cleaner, cheaper, more available, more affordable, and scalable. It doesn't help if it's just one small part of the world. It's got to be. So that's the big challenge. And I'm surprised that tech, if you think any organization would have a lot of, people who want to make the world a better place, it would be, some of these tech companies. And so I think they're missing the boat, because I don't understand. I don't understand the position that, I don't like oil and gas, but I'm going to use it. If somebody wants to go off grid and have those opinions, then that's consistent. But throwing rocks and using the product, that doesn't make sense to me.
Yeah, I think it's a missed opportunity for Google, because there's so many ways to help energy companies who are all trying to improve their environmental impact in dramatic ways. And we have to have oil and gas for the world economy, but there's also, if you can help them be better at what they do, they're going to be even advancing the cause of environmental impact even faster.
Yeah,
so
absolutely.
It's kind of they're not helping; they're actually causing challenges for progress. But like I said, there's going to be plenty of entrepreneurs that step into that void from an AI standpoint. Well, listen, Maynard, I've really enjoyed it. I'm going to wrap this up with just kind of one last question for you. We've been through a lot in the last 11 weeks. And, does this change your view of what a oil and gas business looks like in 2 or 3 years from now? Do you see, is anything fundamentally changed on your radar from, what the winners and losers of our marketplace look like?
It hasn't changed my view of what the winners and losers look like. It has enhanced my view that there is an oil and gas, particularly oil, price recovery out there a few years from now, which is, the climb is going to be even steeper now. Because if you look at what we're doing, the world is still growing. We still need energy. We really don't have super competitive challenges to oil. We're now cutting back all the investment in oil. Energy companies or oil and gas companies can't raise money. You go through all these things and it's going to be a classic. We're dialing the supply way back. And I think the demand, will cover to reasonable levels. And so my view of oil recovering is enhanced. My view of the type of oil and gas company that's successful and what it looks like is similar, which is I do think it is a pretty sizable company. I do think they have a lot of really unique people working in the company. So not just classic petroleum engineers and finance people, but, lots of digital people, lots of, it's a more diverse place. It's a place that is more connected to the outside world. The board is comprised of people, maybe there's a Silicon Valley person, maybe there's a data or other kind of person. I don't know, but I think the boards are going to look different. I think the best companies, I've noticed this forever. If you'd said, let's go back before digital became so cool, the best companies, you could measure them by the length of time it took for the CEO to know there was a problem. However long, or whatever the problem was. So a great company, the CEO knows within an hour, just to pick a time. A terrible company, the person doesn't know for 3 weeks. And so I don't think that's changing. The premium associated with information and knowing where the issues are, I think that's just going to go up because lots of decisions have to be made every day. And so cultures which handle information quickly and have great economic alignment, I think those are going to be great. So I just expect that they will be more, we'll talk about them probably a little bit more like energy companies and a little less like oil and gas companies. Right. And we'll be taught, and the accounting on what's a good company will be how much energy did you produce? What did you make? What's your impact? And how much cash did you pay out? And, why, and there'll be blends of, there will be solar at the site, and there will be various ways of doing things that people will experiment with. But I'm not so sure at the end of the day why you should care so much about exactly what flavor the power came from. So I think the energy companies of a few years from now are going to be much better. I'm excited about them. I think they're going to be great places for young people to work, which I think is, a really important thing. So I'm pretty fired up about it.
Well, great. Maynard, listen, I really appreciate the time, and I know our audience will as well. Just really great thought-provoking discussion about the times we live in and the future that lies ahead for us all. So many thanks, and stay safe.
Well, it's a real honor for me to be here. I've really enjoyed getting to know all of you. And if TPH can ever help any of you with data, opinions, views, you guys are increasingly family. So we're happy to help, and proud of everything you're doing to make oil and gas better.